Hi, Mike. I am doing fantastic. How are you?
I'm doing pretty good. I'm excited to do another one of these episodes.
Yes, me too. And what are we going to be talking about today?
Today, we are going to talk about some of these economic things going on and the likelihood that 2026 might be a really bad year for the housing market.
Hmm. All right, got it. Before that, let's do a quick introduction. Well, my name is Tran, and I'm a Bay Area realtor here in California. And of course, it is always my pleasure to be talking with Mike Weber down in Southern California. And it's always fun to get this like Northern and Southern real estate perspective when we hang each other. Yeah.
Absolutely. Yes. Thank you for the introduction.
Yeah, of course. Okay, so back to the topic. 2026, what do you think is going to be happening next year?
That's a great question, Twee. I am seeing a lot of headlines right now about layoffs across all kinds of different major public companies in the United States. And my fear is that as we head into 2026, there could be a lot of weakness in the labor market. And that means a lot of layoffs, a lot of people suffering economically, which ultimately could lead to a weaker buyer pool and a lot of foreclosures and delinquencies on mortgages, which of course won't be good for the housing market.
Yeah, for sure. For sure. And and of course, our latest news is, Amazon announced 14,000 job cut. And this is not just any job, it's corporate job. And
Mhm.
the majority, actually almost 99% of my buyer pool are corporate employees because,
Mhm.
this is a Bay Area is the tech central of America.
Yeah.
And it is the tech money that are able to afford these, $2 million home around here. And to see
Mhm.
that Amazon laying off that many job, it is very concerning. And not just Amazon. I mean, there are plenty of other tech company that even though there hasn't announced yet, I think
Mhm.
they will because they're definitely top within our community and our engineering who are working for all the big tech that
Right.
are talking about this. Yeah.
Yeah, I mean, obviously AI is kind of the big topic right now. And I mean, no matter how anybody wants to spin it or what you read, the reality is that it is going to take away a lot of jobs. And we're just in the infancy right now. And the thing is these are no longer just, manufacturing jobs or people working in factories. I mean, we're talking about white collar jobs that traditionally have always done pretty well, even in recessions or economic periods where things weren't doing very good. Now, I mean, AI is coming for everybody. And on top of that, technology, robotics, humanoid robots, that is also going to be coming for a lot of average worker type jobs as well, blue collar. So we got a lot of headwinds on the horizon, don't we?
Yeah, we do. And you're right. It is really just across the board, not at both white collar, blue collar, because right before robot handle a lot of stuff, right? But now we are moving into agentic AI, which is the AI that can connect different things. It can actually does a job of even an entry level engineer and entry level position. And I'm sure eventually, as it learn and it's grow, it's going to be able to do even more complex work. And where does that leave all the professional? Where does that leave all the engineer? And even like the floor or the manufacturing work, like
Mhm.
you said, right? There, majority of it is now being done with AI. I mean, even let's go back to Amazon, right? All of that packing, where to store things are all done by robot. And even where, it picking up or like how it's scheduling, all of it is done by robot.
Yeah, yeah, it's definitely getting pretty scary, no doubt about it. And getting back to the housing market, I mean, this is certainly not a good thing. I mean, when you think about the number of people that might lose their jobs, the number of
Mhm.
people. In fact, I'm seeing that it's many people are reporting difficulties even finding a job, even if they had a good job before. Job openings are falling. So just across the economy, there's going to be a lot of pain. And I think this is probably just going to accelerate next year, especially with the economic stuff going on. And then, of course, all this new
Mhm.
AI stuff that's happening as well.
Yeah, no, for sure. And if you look at it, I mean, I do know people who had layoff and having a hard time, and their feedback they say is that any position opening, there are like 500 to 1,000 other people who's also fighting for the exact same job.
Yeah.
And that will translate into the buyer pool because we're going to have a smaller buyer pool. And I think
Yeah.
already we are seeing it right now. And typically, right, we are in the fall season of buying, which is the second best season of the year. But we are
Mm.
seeing it's pretty slow still.
Yeah.
And I was looking at the stat for here, for our county here in Northern California,
Uh-huh.
and in county, which is Santa Clara County, we saw pretty much a 5% drop going from around 1.95 to 1.85
Hmm.
for $1.85 million for an average
Okay.
home. Right? And
Hmm.
even that, I mean, the level of income you have to make in order to buy something like that, you are going there with these corporate layoffs, it will affect that buyer ability to
Hmm.
purchase a home. And I
Yeah.
definitely would be, I mean, I think the layoff will affect the stock market, and with the stock market going down, it will affect the buying power of the buyers. And once that affects the buying power, it just across the board. It's almost like a domino effect.
Yeah, you're absolutely right. In fact, in my area, I just looked at the data yesterday and did a video on it. Both Los Angeles County and Orange County have the highest level of inventory that we've had going all the way back to the housing crisis or the great financial crisis 2009 2010. So we haven't seen that sort of level of inventory, and this is even now in the slow season, around the holidays, and inventory levels are still way up there. So any more things, like rates staying high longer than expected or more weakness in the economy, that is probably just going to push inventory up even higher, and a lot of homes are going to be sitting. And eventually, if that happens, of course, prices have to come down, right?
Yeah. No, and actually, like you're right. I definitely seeing more inventory in the market too,
Hmm.
where we're at, and homes are sitting longer. There are
Yeah.
a few of the homes, the one that I recently listed and went into contract. We have
Hmm.
several other homes that are very similar that are still on the market for like over a month, and that is
Yeah.
rare for us because typically homes are sold within one weekend, maybe the second weekend, and it is
Mhm.
done. So to see something being on the market for more than a month, it is not normal for us here. And then
100%.
on top of that, and that's a single family home, right? For the condo market, it is getting beat up. It is
Yeah.
so rough for condo owners right now.
Yeah.
Because even for me, I have a listing that's been on the market for some time, and we
Mhm.
price it really well, and there's very little showing, and barely much interest in the condo. And
Yeah.
so it is rough. It is a tough time for condo owners.
Yeah. I have a condo listed right now and it's been on the market 20 days and we've only had three showings. So definitely not good. And another one that I don't see a lot of people talking about is this idea of inflation, continuing to crowd out people's, discretionary income or income that they have to make their mortgage payments as time goes on. And so, in fact, we're just had some data come out recently about FHA delinquencies. Those are up 12% year over year. And I think this is going to continue to happen as the cost of living continues to rise. And already people typically spend a lot of their income on the housing payment. And I mean, it's getting to a point where a lot of people are going to have to make a decision of whether or not they're going to eat or have a car or be able to pay their health insurance or make their house payment. And obviously, when decisions get that critical, a lot of times the house payment takes a back seat to the more important things, right?
Yeah, no, for sure. And I mean, when it comes to the house payment, right, you have a good 3, 4 months before things get worse. So I would see why people would, want to pay the immediate bill of, your utility put on the table, and then will you deal with the mortgage when it comes to that. But even on top of that, not just the homeowner, but I feel also as a renter will have a
Mhm.
really hard time because right now, right, the FHA um, loan type, you only have to do 3% or 5%. So the
Three and a
mortgage
half.
is
Yeah,
about,
three and a half.
yeah, it's the loan itself is a lot bigger.
Yeah, absolutely. And another thing that I'm sure you're aware of is that stemming from COVID, there were a lot of foreclosure moratoriums across the country. And so that's really prevented, I think, a lot of houses that would have been foreclosed upon from coming on the market. And I think a lot of those are scheduled to end in many places. So probably in 2026, we're going to start to see a lot of additional inventory coming online from a lot of foreclosures across the country as well, right?
Yeah. Mhm. So speaking of moratorium, we are now right now 5 years past COVID. All the rent control and all the moratorium has been lifted. So
Hmm.
that is going to affect the housing market as well. Because I don't know where you're at, but where I am, all around here in the Bay Area, we have so much rent control, especially San
Hmm.
Francisco. San Jose now have rent control. We
Right.
have it in Hayward, San Jose, right? So we're not allowed to, even like when you want, if your contract is up, right, you cannot end the contract or give a tenant 30-day notice without a legitimate reason.
Hmm.
So I'm like, that I feel like such an infringement on home ownership. But,
Hmm.
we are living in the Republic of California.
Right,
Yeah.
right.
And then on top of that, right? I mean, rent is on the rise, but it has been very uh, I would say that it hasn't made much movement in the past few years. And even for
Hmm.
myself, like when I am managing my properties and I'm looking out, when I see the tenant pool is the quality tenant pool is not quite there. When you're looking at their income or their really payment ability and things like that, it is a very tough choice. And
Hmm.
honestly, like I just got one of my unit back and I was like, oh my God, it is brutal because it's coming back in such a condition that it's gonna cost me easily over $100,000 to bring it back to current
Oh
condition.
my
And I'm like,
God.
it is to me, it's heartbreaking to even walk into this. I'm like, I was just sad, and I was like, you know what? Maybe I should just like sell this off and cash out and just go enjoy life on the beach somewhere.
Yeah, no, I'm glad you brought that up because you're totally right. I mean, landlords are facing all kinds of inflation across the board in everything: homeowners insurance, repairs, maintenance. In California, balcony laws where you got to do all this extra work that you never anticipated. And at the same time, you have local governments preventing them from raising rents. And in many cases, even getting somebody out of the property that's not paying the rent for years in some cases. Here in SoCal, in many municipalities, people are actually just barely getting some people out from COVID laws that have been stuck in there for several years. And on that note, Mondami just won in New York, and he's talking about rent freezes there. So you can't have both at the same time. You can't block landlords from raising rent in a highly inflationary environment, let tenants live there who aren't paying, and make the owners absorb those losses. That's only going to work for so long before these owners, just like you, say enough is enough. I can't keep doing this, so I'm going to sell the property. I'm going to get out while I can before it gets worse. And the next thing you know, we're going to have a lot more properties on the market, a lot more multi-unit properties on the market if things keep going in this direction.
Yeah. Yeah. And that's actually one of the things that me and my husband was discussing. I'm like, do we put the home on the market? Because like right now I'm looking at the outlook and I'm like, it is not very rosy right now.
Yeah.
And so we're like, we're making our plan whether, do we want to put it on and just cash out? And
Hmm.
that's the only thing, right? Because like you said, that inflation not just for renter homeowner, but now that I've got this unit back and I'm looking at quotes and things like that, and I'm like, oh my God, it has increased so much.
Yeah.
Even doing a bathroom once, I mean, 10 years ago, I redid a bathroom for like $3,000 in labor. Now it is $12,000. And
Hmm.
this is for like not a big giant bathroom. A simple small bathroom is
Yeah.
$12,000 for labor only. So if
I
you
have
add
a
it, it's zero.
mhm. Just real quick, I have a contractor friend and she just got a quote for a permit for a bathroom and it was $5,000 just to get the permit, not even to do the work. I mean, that is absurd that it could cost $5,000 to get the necessary permits for a shower, toilet, and sink, in a property, right?
Yeah, and imagine like now you're gonna add on another 12,000 for labor for someone to do the work, and then
Yeah.
probably another $5,000 just for easily material. And this is
Yeah.
not like you're looking at over $20,000 for a simple bathroom. I mean, if I was having like a grand home and it's gonna be like some opulent bathroom, okay, but
Yeah.
no,
Plus, it's
and that's
vacant
where
for a
we're
month, another month on top of that. And then what if somebody comes in there and destroys it, right? Which is a very common problem that landlords are facing, particularly here in California. So trust me, I get the pain. Yeah.
Yeah, yeah. And with the new California law, you actually can only charge tenant 1 month worth of deposit. So if you're renting the home for $4,000, your deposit is only going to be $4,000. So it's like $4,000 doesn't even do anything.
Really? That's even if the damages are greater than that amount?
No, no, I'm talking about like when you start a new
Oh,
lease,
gotcha.
right?
Yeah,
You
yeah. Understood.
only charge 1 month worth of it, and so and
Yeah.
then sometimes it's like I don't know. I mean, barely if they come out with like a fuel hole, and then even like if they have dirty walls and things like that, it costs $4,000 just to repaint.
Yeah,
So
like as if people are not capable of making their own choices on how much they feel they're comfortable with for a deposit to rent out their property, and on the other side, a deposit that somebody's willing to pay to rent out a property. Obviously, if you have a beautifully renovated property, you spent several $100,000 making it gorgeous, you may want a
right?
slightly larger deposit to protect yourself, and there's probably somebody out there that's happy to pay it to you to be able to enjoy living in such a nice place. But of course, the government steps in and says, no, you can't do that, right? Doesn't make any sense.
Yeah, and I feel like really the rental market is the only place where the government has such a rich into the rules because like nowhere else do they say, oh, you can't increase your price. Nowhere else say you can if they're in there and they don't have money and it's COVID and they don't or anything, you can't charge them
Yeah,
rent. Like
yeah,
nowhere else. I mean, they don't sell that to the car industry, they don't sell that to Amazon or anywhere else, but the rental market.
yeah.
So it's I
Well,
don't know what to say.
you and I
Mhm.
know, I mean, for many years now, the cost of these rental properties, especially like multi-unit property and just regular
Mhm.
property in general, has been so high that along with the higher interest rates, the payment for people that have bought these properties recently is generally much higher than the rent that you can even collect. And then to make matters worse, if the government just arbitrarily says you can't raise the rents, or there's all these rules that you have to follow or jump through if you have a vacancy, or if you have a tenant stop paying, it takes you 2 years to get them out. All of a sudden now you're upside down. You're negative on this property that you bought that you thought was going to help you grow your wealth over time, help you to be prepared better for retirement, things that we need in society so people are better off as time goes on. And now those things are getting turned upside down and they're actually liabilities instead of assets. And we have no end in sight where this might, things might change. And this is a big problem.
Yeah.
Yeah.
Yeah, and like you said, right? I don't think it's gonna end anytime soon. And it definitely right now it is so incredibly difficult to even find a property that would make sense.
Yeah.
Because I think where we are, the housing price, and then it's the interest rate. I think before when the interest rate was lower, we
Hmm.
definitely have more investor because
Yeah.
it still makes sense. We still have a cash flow, even if it's very minimal, right? Because we're investing for the long term. But
Right.
now with the interest rate it make no sense to buy here in the Bay Area. Or like I feel almost like anywhere in California it really doesn't make sense anymore.
Yeah, multi-unit's ugly. I mean, and then if you have, $1 million to buy $1 million property, why are you going to do that when you're going to walk away with 1 or 2% return? You might as well just go put that in anything else. You could put it in a treasury bill, for above
Yeah.
4%, or a multitude of other investments that yield much higher than that,
Mhm.
and have no heartache,
Yeah.
no stress, and just go on a beach somewhere and enjoy the income, which is 4 times more than you're going to get from buying that multi-unit property here in SoCal or in NorCal, it sounds like.
Yeah, for sure, for sure. And so that's why like it sometimes like even the listing that I had recently, right? There was a few investors that walk in and I'm like, why would you consider this for an investment? This makes no sense.
Absolutely. Yeah. And then one other thought too is that, everybody expects interest rates to go down, next year. And of course, the Fed is trying to lower them, but it's certainly possible that we could end up in a new paradigm for several years where rates maybe do stay much higher than they were back 3, 4, 5 years ago when they got super low around 3% or whatever. We could be in a new period where rates maybe are 5.5 or 6% is the lowest that they go for several years. And I don't think many people are expecting that. And if that happens, I mean, I don't know. It's going to be very difficult for a lot of buyers to qualify to be able to afford these houses. And it could be the straw that ultimately breaks the camel's back going into 2026. And we could start seeing a lot more property getting listed and prices start falling. Who knows, right?
Yeah, and I think it's really interesting because I was looking at the National Association Realtor projections. I was looking at Zillow projection or even Redfin, right? And now across the board, everybody's expecting price increase and buyer coming back to the market. But reality is right now, the way, we're seeing everything that happening, like
Mhm.
we had discussed, with the layoff, with the AI, the inflation and all these things going on, I really
Mhm.
don't see how that's going to happen where they're projecting an 11% increase in terms of
Yeah.
home buying. Like, that's a double digit. I don't know.
Yeah.
Yeah.
Yeah, I feel like sometimes there's a lot of sort of pressure or whatever it is to continue to paint as rosy a picture as possible. I generally don't think too much about these estimates because I just watch the market like you and I do closely and kind of have a sense for myself. But yeah, I
Mhm.
mean, what another great conversation to have with you, Twee. Again, anybody, if you need help with real estate up in the Bay Area, San Jose area, reach out to Twee. If you need any help down here in SoCal, I'm here. Reach out to me. I love these conversations, Twee. We had a great one today and hope we get to do this again soon.
That sounds good. I'll see you next time.